Welcome to the first S&P Futures day trading recap on my Apex Paid account, where I'll be able to withdraw profits without incurring any of the losses. I've been busy traveling, which is why I haven't been posting trade recap videos, but I have been posting daily account updates in my community tab. We're off to a solid start so far, but today almost went off the rails, as you'll see in this video. This first trade was pretty straightforward, and is an example of one of my favorite price action setups, which is to fade a counter trend breakout that seems to reverse after touching the EMA. This is exactly what happens here, and I'm able to start off the day with a nice stress-free scalp. Same setup for the second trade. After I see price break out of a strong uptrend, I fade the breakout with an entry near the EMA. This one gets within one tick of my profit target before reversing back down a bit, but I stay patient and let the trade fully play out. Thankfully, it eventually comes back up and I'm able to win my second trade in a row. When I see the same setup present itself for the third time, I can't help but try it again. This time I recognized that the structure was a bit more trading range-like and knew it would be a little harder for price to hit my profit target that was above the high of day. My concerns were valid as price was unable to make new highs and I get stopped out for my first loss of the day. Still following my trading plan, so far so good, right? This is where things start to go off the rails a little. Seeing price make the new high after I got stopped out was a little tilting, but price action rules dictate that after price breaks out and reverses to form new extremes, this could be the start of a potential trend reversal. So I go short on a nice second entry short setup. Well, price almost immediately starts racing towards my initial stop loss above the signal bar, and I instinctively raise it to be above the high of day before it gets touched. Raising my stop loss mid-trade is something that I'm trying not to do, as this shows that I wasn't mentally prepared to get stopped out before I entered the trade. To meet my 1-to-1 reward to risk requirement, I also adjust my profit target to match my stop loss risk. Unfortunately, my new stop loss and profit targets were now both outside where price appears to have started ranging. I was still expecting price to flush downwards though, especially since it put in a lower high. I became more confident price will eventually drop when it forms a double top, and I actually add another contract with a stop order. However, price just continues to chop around inside the trading range, and I end up deciding to add another contract, this time with a limit order near the top of the trading range. Of course, after I decide to finally try to play the trading range, it breaks against me and I get stopped out for a huge loss. Not gonna lie, I was pretty frustrated after that last loss, and when price broke upwards out of the trading range with conviction, I instinctively hopped in long. Al Brooks has described in his trading course that usually the second you wonder whether it's too late to catch a strong trend is when you have to immediately jump in. Price action rules also dictate that usually pre-consolidation trends will resume after consolidation, and the pre-consolidation trend was bullish. For these reasons, and the fact that it might have been a little tilted, I entered long, and also sized into another contract when I saw more evidence of bulls gaining control. I scalped out of my first contract for a nice little gain, and seeing so much bullish momentum, I decided to take my chances on a runner with a stop below the most recent pivot low. Price continues to aggressively push higher. Al Brooks refers to super bullish price action as always in long, and the profit target of my runner easily gets hit, which actually made back the massive loss from the previous trade. This trade and the previous one definitely did not follow my trading plan, and I decided to stop trading here before things get any further out of hand. Well, today's final trading results certainly weren't anything to write home about, but there were certainly some ups and downs along the way. As exciting as those last two trades were, I definitely preferred the first three trades where I didn't adjust my profit and loss levels after my initial entry, and just let the trade fully play out. These followed my trading plan, minimized discretion, and were just a lot less emotional, which decreased the chance of going on tilt and making irrational trading decisions. I definitely did gain some insights into how to profitably trade with discretion though. For example, in trade 4, I should have identified the trading range sooner and made the second add with a limit order at the top of the range and exited when it retested the bottom. Trying to enter trades in ranging price action with stop orders is generally not a good idea. But really, I should have just stuck to the plan and let myself get stopped out when price moved against me the first time. These kind of trading mistakes are a reminder of how much I still need to work on my trading discipline and be better at accepting my stop loss risk before taking on any trade. Anyway, I'm still content with the small green day, which has brought the account up to 50,400. I'm trading with smaller size than it did on the previous evaluation account to prioritize capital preservation now that I'm trading a paid account. Hopefully we'll have smaller swings on this account and see a slow and steady trajectory upwards. So far this has been the case, so let's keep it up. As always, thanks for watching. Please give a thumbs up if you enjoyed, and subscribe so you're notified of the next time I post a trade recap. In the meantime, I'll continue posting daily profit and loss updates in my channel's community tab.